Good morning. Welcome to Morning Call. It was somber overnight news for us, but must say that teacher President Abdul Kalam chose to die, or had the grace, had the good fortune to, have his last hour, his last minutes with students. I mean, I don't think a teacher could have asked for a better way to depart from this earth. That is a blessing for a life well lived and a life where he distributed everything that he had learned.
Oh, clearly, lucky to have gone that way. And it's an end of an era, right? I mean, the people's president is now no more. But he left a lot back in terms of wisdom and knowledge.
He stood out as the president. I mean, in the rank of learned Indian presidents, yes. I think after Radhakrishnan, he must have been the most learned president.
And I think one more thing, in today's world with so much divisiveness in terms of politics, he was what you call Ajat Shatru. He had absolutely no enemy. Everyone loved him. He was, loved by each and every individual.
All right. Well, he said, do not mourn my death when I go. Just do what you love doing, and that's continuing with work. So that's what we're going to do. Yesterday was a very disappointing day for us, but not just for us, for the entire global sphere. And I think that is the most important cue that you have to work with this morning as well, the global weakness. We've seen a fifth straight day of losses for the US markets. And even across the board, Latha, if you look at what's happening, there's not just caution over China, but there's that FOMC meeting as well that kick-starts today. So there's quite a bit of caution in the system. And I was reading that a lot of the global mining companies are now cutting jobs and facing closures. So, that is a sign perhaps of a capitulation in some of these commodity markets.
Actually, the overarching theme that is playing in front of us is deflation. As you put it, the fact that there isn't any demand. And maybe the recent 5-day sell-off that we have seen, and it's not just in the US, there is a 5-day sell-off, it's a 5-day sell-off practically in all markets. And that may have been triggered actually by that Caixin PMI Chinese data, which was a 15-month low, which gave the world the news that the world's biggest commodity consumer is actually at a 15-month slowest pace of growth. And that, I think, has set a chain reaction of even further sell-off. It wasn't as if, even 2 weeks ago, we got the IMF downgrading the global growth data. So actually, we've been getting lower and lower growth data. If you look at the chain of global data that we have got, every data point is indicating that the world is slower than what previous estimates had put it. And that explains why you could see it very clearly in the commodities markets, and more importantly in gold. I mean, every time the euro goes through such a huge turmoil, whether the currency will survive as it was known, you would normally see gold shooting up, but gold didn't shoot up all through the Greek crisis. It was crying out that this is deflation, because gold is the best hedge against inflation, is the best hedge against any currency crisis. If it didn't move, it was already telling you that the world is in a serious phase of deflation. I mean, the spot of bother in terms of growth. And I think that's what is hitting now the equity markets day after day. The Caterpillar CEO was telling you the same thing. I don't know where to put the money, so I'm doing a buyback, I'm giving it back to shareholders. We've got so much of both anecdotal as well as macro data telling us about the growth scare, and that's reflecting in the equity markets sell-off as well. Just one more point, even a couple of good data points can also turn the markets, because now it is oversold terrain in practically every market, whether it is crude or whether it's gold or whether it's a whole host of equity markets. So one or two good data points can change sentiment. Things don't fall in linear fashion. There would be some very deep corrections, like we saw in crude. Up until June, mid-June or even early July, crude was actually 40% up year to date. And now it's once again plumbing its near-term lows, or will go back to its 5-year lows. So that correction could happen. The Indian position is slightly different. In India, I would really worry that the global slowdown is going to hit our growth numbers. We are not yet coming to terms with it. Yesterday, Arvind Subramaniam raised that point briefly in a speech, which was more about FTAs, but his concentration was that we are not coming to terms with the huge impact that a slowing world can have on the Indian economy, and it will be redoubled by the fact that the rupee is very strong. I mean, we may cry that rupee is, 5-week low or 2-week low or whatever those headlines say, which is nonsensical. If you compare year on year or in a 5-year time frame, rupee is one of the strongest currencies. Yes. So our good boy behavior on current account deficit, on fiscal deficit, is keeping the rupee so steady that will make our exports that much more difficult to sell in the global market. So we have to worry about growth fears ourselves.
Oh yes, absolutely. And we saw that play out in our own markets yesterday. There was quite a bit of selling by FII. So in the cash market itself, there was around 860 crores of selling that we saw. And in fact, if you look at the delivery-based selling, there was 350 crores of delivery-based selling in Axis Bank, 200 crores in ICICI Bank, 200 crores in Tata Motors. So there is clearly money being taken off the table.
All the stocks that you are mentioning are smokestack stocks, are stocks which are reflective of the economy. So it is the growth scare. The reason why I'm stressing on the growth scare is that we must not even for a moment believe this is because of participatory notes. It has got nothing at all to do with that fear.
And we realized that very early in the day yesterday.
Exactly. Yeah. So, rather than try and fix something which is, not the real concern of the market, we should be fixing growth concerns.
All right. Well, Anuj, that's the point. I mean, yesterday was a bearish trend that we saw in the market. Do you think now we've moved decisively in that direction?
Morning, Sonia. I think the trend had changed last Friday itself, and that's something that we referred to as well, because the market gave warning signs on Thursday when it could not take out 86.50. That is when the call was to book some profits. On Friday, when the market for the first time had a follow-on to a big move, that was the trend changer, and the call at that point was to go short on the market. Honestly, if someone would have taken short position at that point, and there's no reason to cover those short positions, even yesterday. Yesterday was just a reminder, actually, Sonia, of the vulnerability of this market, of a market which goes up on lack of delivery-based buying. I kept referring to the fact that market was lacking delivery-based buying. It looks good when that kind of market goes up. It looks equally bad when that market goes down, right? So that's what happened yesterday. The market went up on F&O volumes, it fell on F&O volumes. Even this delivery-based selling that you're referring to, I've seen worse days. You could only point out 3 or 4 stocks, right, with more than 300 crores delivery-based selling. There were not too many stocks. All the big heavyweights like Tata Motors, Infosys, Reliance, they were having 100, 150 crore of delivery-based selling, and all of them were impacting the market by 10 points, 12 points, 13 points, and you had the Nifty down so much. So that was just telling you that this is a market which is very shallow right now. It
still has scope to correct quite a bit.
It still has scope to correct quite a bit, actually. I'm not...
But, ultimately, we are only at early July levels.
Yeah, so...
The point is, it was not very long ago that we were at 8,300.
Yeah, so, the point is that FI sold 800 crores in cash market, but this is expiry week. So let's talk about the F&O market. Yesterday there was selling of 1400 crores in index futures, and in that I saw unwinding of 32,000 index longs, and there was fresh build-up of 33,000 fresh short positions. In index options there was buying of 1500 crores. For every one index call, there were nearly 5 index puts that were bought. 12,000 index calls were bought and 53,000 index puts were bought. And my sense is that a lot of this was actually on the bank Nifty. Yes, the Nifty was seeing selling pressure. The bank Nifty was seeing even more selling pressure. And the sense I get is that the bank Nifty is in a decisive bear phase. The Nifty might still not be in a bear phase, but the bank Nifty definitely is.
Okay. So, if you had to tell us about some support levels, I know in a market like this, there are, nothing counts, but still, ballpark numbers for the Nifty and the bank Nifty?
Well, the Nifty is now trading below 200-day moving average. Yesterday, it took one support at 200-day moving average. The market always takes one support at 200-day moving average, and after that, once it gives up that support, it normally trades below that mark for a consistent period of time. And the